Hello and welcome. India's consumption engine is changing shape, not just growing but evolving. More premiumization, more urban influence, more digital first spending, and an expanding middle India that's driving entirely new categories. To understand what this means for investors and how the new Union Consumption Fund intends to capture these shifts, we're joined by Harshad Patwardhan, CIO of Union AMC, and our CEO, Dhirendra Kumar. So, welcome, gentlemen.
Thank you.
Let's begin by grounding ourselves in the big picture. Harshad, I'll come to you first. So, every investor already gets some exposure to consumption through diversified funds. So, what is the distinctive advantage of a dedicated consumption portfolio like yours, and what makes it materially different, not just thematically, but what it can achieve, actually capture?
Sure. Thanks a lot, Ruchira. Good to be back on your program and always good to be there on the same show as Dhirendra Kumar. You're right that in a diversified funds, like let's say a flexi fund or a multi cap fund, you will get some exposure to consumption. But we believe that at this point of time, when a lot of stars are aligning for consumption as a theme in terms of, as you know, for the last 12 months or so, both Government of India and RBI have taken several steps to induce consumption and volume growth in the economy. At that time, we thought that an exclusive exposure to consumption is something that is very important, because in a diversified schemes, you will notice that there are plenty of other parts of economy which are important, of course, in their own way. But a lot of capital then is 100% capital is not available to play the consumption theme. For instance, IT services, capital goods, defense, all these are important components of the economy, but and that leaves maybe 60-70% or 50% capital only to play consumption. We believe that it's important at this time particularly to have a vehicle where you can play consumption. 100% of the capital will be invested in consumption oriented themes, and this fund allows us to go a little deep in terms of, and I can elaborate on that, particularly the framework that we have devised called RISE, where we can play penetration, we can play premiumization, we can play services. In a typical diversified fund, it is not possible really to go that deep and take meaningful exposure to some of these themes.
So, Harshad, can you explain why do you think this is a good time to launch this fund?
I think one of the key reasons is that if you look at last few years, particularly post-pandemic, that period was marked by relatively low consumption. First, it started with weak rural consumption immediately after pandemic. And last 1.5 to 2 years, most consumer-facing companies have been complaining about urban consumption being weak. And if you look at the steps taken by the policymakers over the last year or so, are focused on inducing consumption. So, for example, let's look at Government of India delivered a big tax cut in budget in February earlier this year. So keeping more money in the pockets of consumers and hoping that they will go out and spend. And the recent big bang or a big bazooka, which was the GST cut, which has made several products very affordable. And we have seen, at least in the festive season, it has made a big impact. In addition to that, if you look at what RBI has done, one is fairly aggressive rate cuts, 100 basis point of policy rate cut. Second, getting better liquidity, surplus liquidity in the banking system so that there is transmission of rate cuts. And third, relaxation of many of the consumer lending, unsecured lending related policies. So essentially, policymakers want the Indian consumer to go out and spend. In addition to that, if you look at what is coming now next year, 8th pay commission has already been notified. The report may come maybe 12 months, 15 months from now. But remember, the arrears will also be paid as a part of that from January. And we have seen that that has proved to be a big stimulant to the economy, particularly from consumption side. And lastly, if you look at what is the missing link for the economy to become sustainable in terms of growth, the missing link was private capex. We all know that over the last 10 years, the driving force was actually government capex. And government has been nudging private companies to go out and spend. But they will not spend till they see the volume growth in their business. And I think what government intended to do was to induce volume growth so that the private industrialists will see merit in expanding capacity. Because when that happens, then you hire more people, overall wage income goes up, and then there is more consumption. So I believe that the virtuous cycle has, the initial steps towards that virtuous cycle have been taken now.
Dhirendra, Harshad just explained the fund's edge, but from an investor's lens, when does a dedicated theme like consumption genuinely add value to a long term portfolio, and which type of investor benefits most from this additional layer?
No, Harshad correctly, rightly emphasized that for the first time we are, seeing the emergence of domestic consumption economy, and that is also the government focus. It has started coming in the policy framework as well. But for most investors, the core should always be diversified equity fund, the flexi caps, the large and mid caps, and the multi caps and all that, and that could well be 67, 70%. But the the context of consumption, so it does not replace those. But once you have for your equity allocation, I think the timing looks very opportune, but that should not be the only reason why an investor should be investing in this. Of your equity allocation, it could be a very meaningful exposure, 20-30%, simply because this rising income, premiumization, the formalization of the economy, and digital spending, and most investors will also be able to relate to it, simply because you have a lot of investors who are experiencing it. Spending is very much a bigger part of our framework for every individual than investing, and you are a consumer too. So a theme like this works for someone who can hold through full cycle. uh, don't look at it just for the reason Harshad is saying, that it looks very opportune. I agree with him that it looks very opportune. And it also, from a valuation perspective, many of these companies might also look very attractive. But there is another reason why you should, this is a secular theme. It holds promise. And one should think beyond this, because there are layers within this. This is a very broad theme. I think investors should think long term with particularly this thing. This is not a sector fund. This is not something which is very narrow. It is, despite being a theme, it is very broad based. So think of a full market cycle and think for the long haul. Have a meaningful exposure, and you will be most investors will be able to relate to this theme. They can empathize with more, simply because we are also a consumer in the first place.
Right. Harshad, you mentioned your RISE framework, which offers a very structured way of thinking about how India consumes. So, how does this framework shape your stock selection? And also, could you walk us through how it helps you filter and prioritize opportunities?
Sure. I will just elaborate on the RISE acronym that
Yeah.
we have. So first one is R is reach, which is penetration. Now
Yeah.
penetration, I know when I started my career, and I'm sure Dhirendra Kumar also remembers, most research reports used to start saying that the per capita income, per capita consumption of a certain product is so much in India and so much in China. That's how many research reports used to start. So penetration is still a theme, but in many categories, I think India is now well penetrated. However, in consumer durables, there are certain categories still, for example, air conditioners, which still have a lot of penetration that can increase, because power availability was a problem 10 years ago, which is now largely taken care of. The other one, S, I will jump to from R to S. S is spend up, which is basically premiumization. In my opinion, currently in consumption, and that will get reflected in the portfolio as well, the most dominant theme probably will be premiumization. And premiumization you see pretty much in all product and service categories. A hotel company will tell you that their luxury brand is selling better than the entry level brand. We have all seen what happened in passenger cars, for example. A decade ago, 2 decades ago, SUV was a very small proportion. Now, two-thirds of the cars sold are SUVs. So you
Right.
see premiumization pretty much everywhere. I think that is a very powerful theme you will see in the portfolio as well. Then E, which is experience. Now, when you think of consumption, most people think in terms of things to buy. But we all know that increasingly, and the newer generation, and for that matter, older generation's perspective also had changed. that people want to put money in gaining experiences, which is, luxury travel, and so on. So E, which is experiences or consumption of services, will be an important component of this portfolio. And the last one, the I, which are more, I would say, intermediaries, which are enablers. So
Mhm.
consumption financing or platform companies, which have emerged in India over the last 5 to 10 years, who facilitate consumption, will also be part of that. So I would say penetration probably will be the least smallest component of the portfolio, and the biggest could be premiumization and services.
Right. Okay. Now, Dhirendra, as you were discussing themes, they rise and fade, but consumption is often seen as a constant. So, still, near-term numbers they can look uneven. How should investors interpret these short-term fluctuations without losing sight of the underlying structural trend?
Investors should look at consumption as a theme very differently.
Mhm.
The broad theme is that the long-term trend of rising income, aspiration, demographic, which is very favorable. And there could be a lot of noise in between. There could be a tactical thing. There could be a short-term headwind or tailwind, like a monsoon or election noise or a rural slowdown this quarter or next quarter or something like that. Or some regulatory changes which might affect favorably or can hurt a particular component of the whole story. So in this, it's very important for investors to think long term or think of at least a full market cycle. There are components in these in this theme, like we saw soon after COVID that the boom in autos, and we saw the premium, the auto as a theme and premiumization is playing, and we can see another change here. Another year it could be quick service restaurants, and something which actually comes with a force or gains prominence. We have to be very aware of the other side to it. They go out of favor too. Uh,
Hmm.
but so understand that there are broader tailwinds to this, and something or the other will always be in favor. And so own the trend, not the last sector's hero or sector. But, don't get attracted to it because certain things or few components of this did very well. I think the biggest risk with any theme is not that India will stop consuming. The real risk is that investors abandon the theme at exactly the wrong time. Yeah, so I think patience is important. If you can't live with the periods of underperformance, you won't earn the long-term benefit of this structural story. Have a meaningful allocation, 10, 15, 20%, and come with that belief. And don't come for next 3 years, 3 months or 6 months simply because uh, some index is looking very promising.
Right. Harshad, another concern that investors have is often the rise in valuations. So many parts of the consumption universe, be it staples, discretionary, or certain durables also, they trade at a premium. How do you separate justifiable premium valuations from areas where optimism may be running ahead of fundamentals?
Ruchira, the truth is in today's market, nothing that is good and quality is available cheap.
Hmm.
And we shouldn't also hope and pray for it, because that will need a big panic correction for stocks to be available at cheap valuations. So you are right in your observation that in the consumption space, but just as in the capital goods space, today the valuations are at a premium. As fund managers and as analysts, what we try to focus on is that is there growth supporting it? Because we have seen in the past across sectors that premium valuations sustain if there is a visible growth, forecastable growth over the next several years. So our focus here is going to be to see which are the pockets
Hmm.
where that sustainable growth is there. And as Dhirendra rightly said, this is a long-term sustainable theme. And when we use the framework like RISE, the purpose for this framework is also as to where exactly why are we buying a particular stock in this portfolio. That becomes clear to us and to others. And if we can see long-term growth playing out, then I think premium valuations is itself is not a problem, because we have seen in the past it can sustain that way. Because frankly, valuations to a great extent is a function of flows.
Right. Dhirendra, you just mentioned that one should have patience and allocate 10 to
Yeah.
20% of their portfolio to this theme. So, if you could also elaborate on how should this fit alongside their core diversified equity holdings, complement it, enhance it, simply fine tune, what should be the
For most long-term investors in equity, substantial part of your allocation should be in boring, diversified funds. And beyond that, it could be, this should be this should a thematic fund like consumption. If you buy into the idea, or if you are impressed by the idea, or if you think it's promising, is there to tilt, not to carry the whole portfolio, and have a meaningful allocation. 10%, 15%, 20%, but don't have don't think in terms of 2%. It's neither here nor there. uh, I think I can offer a very clear rule that a new or a moderate investor, he should think in terms of having a 10% allocation, enough to matter, but not too much to hurt. Because this will also have it can have a relatively higher cyclicality. More experienced, high conviction investors, I think, who understand cycle, has stayed through full market cycle, has been there in the market for more than 5-10 years, they can well go up to 15-20%. Within that, consumption could be one of the key allocation. Don't have too many things, don't spread too thin on too many themes. Simply because, if you need a number, for most investors, it will be 5-10% in a consumption fund. For somebody experienced, and it could be higher, but that's the way to look at it.
Can I just add to what Dhirendra
Sure,
said?
sure. Please do.
If you look at it from a top-down perspective, the overall economy, just to put some number to it, 55% of the economy is actually private consumption. So the question that you asked him, and so I agree with him that it is not a sector fund; it is a theme fund, and it represents the biggest part of the economy. So that is something that investors can keep in mind.
Harshad, some categories are surging in consumption. Usually, some categories are surging while others are clearly in a lower phase. So, how do you avoid being overexposed to part of the market that are structurally soft without missing the segments where momentum is genuinely building?
Yes, there are different parts of consumption economy, some accelerating, some decelerating. So one of the key things from a stock selection perspective for this fund at different points of time, we will clearly be looking at which parts of that, consumption basket there is demand acceleration. Also, an equally important thing is where is it that the competitive intensity at that point of time is less. So where is the pricing power available in which bucket? So these are the two important components, because from a long-term perspective, I think most categories in India will do well. However, the competitive intensity ebbs and flows. So that these two, three will be the important considerations from a stock selection perspective.
Right. And what are the specific markers that tell you that a company's competitive intensity is strengthening or it's slipping? If you can elaborate on
So
that.
one is market share. Top two, three players, what kind of market share do they enjoy at a point in time? Then there are certain sectors which are inherently, very difficult for entry of new customers. As an example, I can give you aviation. Aviation, all of us wish that there were more players, right? When we are air travelers. But that is an industry where it's very, very difficult for a new player, even if you had billions of dollars, to start a new airline and grow, because shortage is at the acquiring of aircrafts level. Whereas many other industries, you can say on the consumer durable side, where the barriers to entry are not that high. So these are the things that we assess. And there are certain industries where we have seen that to start with, it was intensely competitive. Telecom is an example. When it started, we all know that at a point in time, there were, I think, 13, 14 players. But then there was a consolidation. So the competitiveness of individual segments also goes up and down. And that is something that we will keep a track of.
Right. One last question, Harshad. Given the sheer breadth of the consumption universe, how do you ensure that the portfolio remains balanced, and what are the checks that prevent any unintentional over concentration there?
Okay, I think that's a very good question because always a risk for a fund manager to get carried away and overexposed to certain themes. So if in our presentation, we have given that if you look at consumption as a broad theme, in terms of AMFI sectors, it spans 19 different sectors. 19, right? So it is a very diversified theme, and that's the reason why we have given those 19 sectors. That doesn't mean that at all points of time all 19 will be represented, but we know that these are the candidates to get into the portfolio, and we will keep evaluating the relative attractiveness of these segments. And I can assure you that it will be a diversified consumption theme, not a concentrated consumption theme. If you look at the consumption in benchmark, which is going to be used for this fund and our competition funds, that is very concentrated. I think it has 30 stocks, and three sectors account for two-thirds of the benchmark. So I don't think we are going to have that level of concentration. Rest assured that it will be a diversified way of playing consumption theme.
All right. Okay. Well, with that, time for us to wrap up this chat. Thank you, gentlemen, for joining in and sharing your insights. Thank you.
Thank
Thank
you.
you very much. Thanks for having us.
We hope this conversation helps you evaluate the Union Consumption Fund with greater clarity. Thank you for joining us. If you like the show, do subscribe to our YouTube channel, and we'll see you in the next episode.